Hey guys, how's it going? Welcome to a session recap for the London session on Wednesday, the 13th of July, 2022. So we know we've been selling off extremely aggressively, right? We've had that daily and 4-hour break of structure. So at any point we can expect those larger, higher time frame pullbacks. At the moment, I have this as my 4-hour swing high and this as my 4-hour swing low. Now I know some of you may have considered that as swing structure, particularly if you're using pip rules. But I've talked about this in the last few videos. It's really not necessary. It doesn't massively matter if you have that as your swing high and your swing low. That's absolutely fine. Like I was saying, kind of a quick recap, because if that does switch bullish, then for you on the 4H, you just have to be able to look at the bigger picture, realize that that's the bigger leg, and maybe that 4-hour bullish trend is only going to last, a short while to mitigate some higher time frame supply before then continuing down. Okay, but as we now obviously have the internal structure and internal order flow concepts in the advanced technical analysis module, we can still view the market the same way, and we can be aware that if this high goes, and that's a very significant signal that we're going to have that much deeper 4-hour pullback. Because remember, an internal break of structure, i.e. that's the internal low, that's the internal high, if we get that break, that's when we get true confirmation of a swing pullback starting. Whereas when we just get a change of character, i.e. this little fractal high getting taken there, that's just a sign of the internal pullback to this level, right? So a chock signals that we're going to get that internal pullback potentially no higher than the strong internal high, right? So chock signals an internal pullback, the start and end of an internal pullback. And then if we got the IBOS, what does that signal? That signals the start and end of a swing pullback, right? And then we'd expect that to continue. So that's kind of just wanted to clear that up. Obviously, when we're selling as well off with a ton of momentum, this is the type of market environment where we can be a lot more aggressive. We're just kind of continuing to try and follow that order flow whilst being aware that eventually that swing pullback may kick in. But until we kind of get that bullish IBOS, I'm not really too concerned about that for now. So yeah, like I was saying, there was a bullish change of character. It's a little bit hard to see unless you're kind of paying attention, but this candle here fails to break the previous candle's low. So we get that fractal pullback, a down movement, and then an up movement. Okay, so we can mark that on as that's sort of the first kind of real sign on the 4H since we've broken here. That's the first time I believe we've had, it's the first time we've had a bullish change of character. So at least we know we may be getting an internal pullback, right? We also have now some 4-hour demand that caused that bullish change of character. Is it the most significant 4-hour demand in the world? Of course not, right? All it's caused is one little change of character, which is the most aggressive break of structure. When we're selling off very, very aggressively, if you try and buy after every little chock, like a lot of times you're going to get burned. So we try and manage your expectations for potentially what you can expect for this move, right? And accept the risk that all we've had is one little chock, right? Price could easily push down through that. But for me personally, it gives us a pretty good framework, especially if we can get decent confirmations on lower time frames. And I'm personally happy to look for longs from this situation, right, and try and push this up higher, potentially even all the way up to the extreme. But of course, price does not have to go that high. We do have bearish order flow here, because remember, just drawing these ranges, price does not have to mitigate refined pivots, right? It just can come back. It doesn't even have to do this, but kind of in its most loosest form, it will come back, mitigate the prior range, and then continue downward, continue that bearish order flow. So what do we have? The new range from the low to the high, right? This is that next supply range. So we try and use those pivot candles to try and be a bit more accurate of where we can catch those turning points. But ultimately, when order flow continues, what do we get? We get the range, initiation, pull back to mitigate it. You see how it just mitigated that prior range. So that is some bearish confluence that we can continue going down, okay? Something to be aware of. But for me personally, I'm happy. Like, there's nice risk to reward to try and target a much deeper pullback, potentially into these buy to sell wicks, or, ideally even higher, right? So maybe a bit too much information there for some of you. All you need to think about is we're very overextended on the 4-hour chart. Potentially we can start to look to play a bullish pullback, but we've only had a 4-hour chock, so that only at this point gives us a signal of a potential 4-hour pullback. Only once we get the IBOS, then can we start to look for that much deeper swing pullback. Okay, cool. So 15 minutes, I've kind of deleted my analysis for coming in today, just so we can kind of build it together. So swing structure, again, spoke about this in kind of more so in the recent videos, but I'm trying to concentrate on the larger swings, because we zoom out, all right, this is that one 4-hour swing leg to the downside, right? This actually would be your 4-hour IBOS, right? And that's when then we would expect that much bigger move, which would in this case be in line with the M15 swing breaker structure. So some of you may want to be a little bit more aggressive and tighter with the swing mapping, and you may have viewed these as swing pullbacks, which again is absolutely fine. Okay, I speak about this in the trade recap video that was uploaded, I believe, yesterday on the 12th of July. It's just that if you have that as bullish, you just have to understand that it may only stay bullish to do what? Just to facilitate this larger pullback and then come down. So you're always managing your expectations of, you know, how far price is going to go and how to interpret those bullish breaks of structure in that instance. For me, I'm just viewing it as internal structure, and this is why, you know, it doesn't massively matter why sort of how you interpret your swing highs and lows in terms of what you deem to be a significant pullback, if you're also, you know, viewing internal structure in the way that we do, because now we have a solid framework to work with. So yesterday, when we got that 4-hour bullish change of character, which happened to be this level here, that was also a bullish internal break of structure on the M15. Okay, so that's pretty decent, like quite a corrective break, almost a sweep of these lows. Nice big bullish momentum coming off as we get that round number parity being defended, right? Probably always going to be a lot of buy orders sitting around that level. You know, algos love stuff like that. So yeah, so the point is a lot of momentum coming in, kind of signaling that we potentially could get that deeper pullback up here. Now, the way I map internal structure is, for me, that would be a decent internal pullback, especially relative to the recent internal swings I've been marking. So that makes sense, right, to mark those on. So let's do that together. There's your internal high. That would have been your internal low that took out the high, right? So we can put our little dotted line for an IBOS here, which then we start to pull back. So then we know where the high is. And then coming into the London session today, we'd had a bearish internal break of structure. So at this point, what's happened? Well, the internal structure is now line bearish in line with the swing structure. So using our framework, what do we expect after to signify that M15 swing pullback is finished? We look for an internal break of structure to realign the internal structure with the swing structure, and then we assume that the internal structure will hold, those strong internal highs will hold until what? Until, right, that won't be breached until it takes out the swing low, or at least the start of that internal leg, right? So that would be the swing low in this case. That's what we expect once we have that bearish IBOS. So in theory, it should now be high probability to do what? To look to catch that lower high to try and take out that swing low. Okay, here's where you have to use a little bit of, you know, human nuance and realize that, well, this is quite a big swing leg. That's not really much of a pullback. Of course, it doesn't have to, especially as it's tapped into the prior swing range. Remember when I drew out that red box on the 4H, that's the prior supply range. So price could tap into that and continue down, especially with the amount of momentum we have, right? So you can keep things very simple and go, okay, well, it's bearish. I want to catch the lower high and I want to catch that move there, which is what I'm open to. But you also have to be open to the fact of kind of, you know, zooming out a little bit, maybe kind of, you know, hiding your drawings for a minute and going, okay, like that's kind of one big leg up and then that's one pullback. So you kind of have to be aware of, you know, the larger internal structure, let's call it, and the smaller internal structure. So what I'm saying is this, I guess, could be your smaller way of looking at it. And I would be looking at this and trying to catch that with the potential we get that movement. But I'm also aware that that can be one leg up. That can be a pullback into this extreme demand, right? And then we can get a larger movement, a much larger movement, simply because we haven't really pulled back that deep. So you can see kind of how price action gets very fractal here, but these are the types of things maybe you want to be thinking about when price action can be a little bit more complex. Okay, and that's why I said in my pre-session analysis, I'm open to basically trading in both directions. I can make a very good bullish case for why we're going to have that much deeper pullback, right? If we had a pulled all the way back up here, mitigate some premium supply, and then we're coming down, right? Obviously, I'm going to be a lot more focused on the shorts, but because we're only really potentially just starting that pullback up to more of the premium, I'm open to looking at that being the higher low, especially as we kind of have this unmitigated extreme demand down here. Pretty nice level to try and look for potentially for that larger move, but also being open to the fact, well, this is still pretty decent internal structure. I'm looking to catch that lower high for that potential movement there. So really what I was expecting coming into London was to try and catch this movement here, the lower high, and trade it down into here and then look for the long for then that potential move, but with the possibility we could dump through. Okay, so hopefully that makes sense. And if it's a little bit overwhelming, keep it even more simple and just focus on the clearer structure that you have, right? Just try and kind of do one layer at a time rather than trying to get too complicated with it if you find it a little bit overwhelming, understandably, at the moment when you're first starting out. So if I'm going to go and draw on my POIs, let's kind of focus on the internal structure for a minute. So we can put this as our internal lows. We're starting to get a bit more of a pullback. So from an internal structure perspective, this is going to be what? This is going to be our strong internal high, right? And then this will be our weak low, right? Because the structure is bearish. This low has not broken anything, so that's why it's in a weak internal low, right? So that's what we can target from an internal structure perspective. So if we want to catch that, excuse me, if we want to catch that sort of pro-internal trend lower high, to catch that movement at least to here, potentially lower, potentially down to here, or potentially even breaking that low, where are the supply POIs in which we could catch it? Well, we always want to look at the extremes ideally, but we can see this is basically, the distance already been mitigated. So yes, price could come up and push deep into the zone, but we kind of want to follow those mitigations and see if there's an unmitigated level. So, you know, you could take this wick here, and then you could maybe draw this candle here, and that's absolutely fine. I personally chose to just take that whole sort of range, just to be a little less refined, and obviously wait for my lower time frame confirmation. So I just took it from that low to that low, because it's basically the way I view that is you've got your kind of one movement down, you pull back, and then your next movement. So I'm just trying to take that whole level of supply, right? Just to be a little less refined. And also it flipped this level here because price came into it, reacted from the demand to validate the demand, mitigated this level here, so now we kind of get a bit of a supply chain forming, and then push down where we now have demand flipping to supply. Okay, so that's a pretty nice, decent level. So we can drag that across, and also it did actually sweep liquidity, swept that high there. Okay, so that's looking like a nice, decent level to potentially catch that lower high. Whoops. That internal lower high to at least target this low, with the potential that we could go further and take that out. But being aware in the back of your mind of the bigger picture that we haven't really pulled back that deep in terms of the overall swing structure. We're pretty oversold. We're coming into a major level. We did have a decent amount of bullish momentum to the upside yesterday. So maybe this is just doing this to then do that, right? So you have the bigger swing like that. And that's what you've got to be aware in the back of your mind. Okay, so where are some levels I would like to get long to play that? Well, down here. This is sort of the unmitigated extreme pivot, the extreme of the reaction leg that flipped the supply level, right? Because we came into supply, failed to put in a lower low, and then led to a pretty good move. So this is a super clean POI. The only thing it doesn't have is inducement in the leg, but you know, I'm not overly bothered by that, especially with kind of all of this liquidity we're building on top of this POI here, and it's the unmitigated extreme. You can just see how decent that zone is. Okay, so hopefully you can see how we're starting to build a bit of a picture here. And why really the kind of two main POIs as I was coming to my desk was this one here, to catch that pro internal trend short to at least target this level, with the potential it could come lower, then look for the long from within here with the potential it could go all the way up to then have that larger swing movement, or at least, you know, there's gonna be plenty of risk to reward to get out or take partials as it comes into this strong internal high if we do continue that movement. Okay, so you see how you outline sort of those high probable areas. You're aware of each of those frameworks, like the small internal, the larger internal, and the swing. Right, I know it can be a little bit complex at times when you're trying to think about multi-time frame analysis, but that's really it. Now, when you kind of obviously get price action like this, you also kind of, you know, want to, or at least the way my brain sees it is I see this as one big range. This is kind of the more obvious range, and right now price is bang in the middle. Right, it's just chopping around in the middle. So what I was trying to say in my pre-session analysis, if you look at my markup, was kind of stay away from this area and try and stick to the extreme. So we want to buy down here and we want to sell up here, ideally, right? Of course, you don't have to. There can be certain times we can look for trades from within here, but this is always going to be the lowest probability. Even though that's the internal range, you know, really for me, like this is the much larger sort of obvious range, and this is always going to be not that high probability. So another tool you can use is if you mark out the 25% and 75% of a Fibonacci tool, right? You can see these two blue lines. That's going to be sort of your top 25%. That's the nice area, or the bottom 25%, okay? Maybe sometimes that can help you just to sort of visualize, right? So 75 and 25, or some people like to do like say the top third and the bottom third, like that. Okay, so it just gives you a little bit more, and you can see you want to be staying out the middle is basically the point I'm trying to make, because that's typically where you get the most indecisive price action. Highs and lows get swept and people get chopped around. Okay, cool. So hopefully you're sort of following me so far. These are the two decent areas I want to be looking at. Now I'm going to go do some bar replay during London, and I'm going to talk through it and how I saw it. But what I want you to keep thinking in the back of your mind is this really, if you want to be, you know, high probability and keep things simple, you want to set your alerts on these POIs and just wait. Maybe you want to set your alert, of course, on when the internal structure highs and lows break as well, just to see how structure's shifting. But this is what you want to sit on your hands for and really wait for things to be a lot clearer and stay out the middle. Okay, because that's where I see a lot of you know, just taking unnecessary losses, and also it really hurts your confidence because suddenly you feel like you can't quite read price action. You're overcomplicating things. You're trying to come up with all of these different scenarios that just that just aren't necessary. Now, before I do that as well, one other thing, because I saw a bit of a discussion in the beginner trade plan about sort of, and I appreciate this is a bit, tricky as well, of when to wait for an M15 chock and when not to, when you are trading counter M15 trend, okay? Now, the reason why I say you want to wait for an M15 chock first before playing counter trend, it's more so in relation to once we get that initial break of structure. Okay, so when price breaks that low, okay, what I'm saying is at least wait for an M15 chock before you start looking for M1 levels, right? Because there might be an M15 POI from over here, right? Obviously it wasn't in this case, we don't have enough data, but imagine there was. The point of, or why that rule about M15 chock is in there is it's in this instance when we've just had the break of structure, at least wait for an M15 chock, right? Before you're going to get long. Obviously it should be trying to be a 4-hour POI here as well. But once we've had that, like obviously a chock here, it's always going to give you the best signal, but especially here, like we've had internal structure shift and blah, blah, blah. Like now, for me personally, if I was trading the beginner trade plan, I would say you can look for M1 entries within here. This is the extreme. We've clearly had sort of that large internal structure shift bullish, and there's decent logic behind why we could get that larger higher low here, internal higher low, to try and catch that movement. So I wouldn't necessarily say you need to wait for an M15 chock here. That rule is more about kind of this specific scenario. Once we get that initial M15 boss, that's kind of when you want to at least wait for a chock, because sometimes it can literally just keep dumping. But when we've had a lot more development, clearly started to break structure to the upside, much more of a bigger move. Yeah, when price comes into a nice extreme level like this, I would say in this instance, that's kind of when you don't need to wait for another M15 chock when we come into here. So I know there's a few questions around that, okay? But obviously to put those rules of when to wait for the exact chock and stuff, there's a million sort of different scenarios that can happen, and that's why the trade plan can get very complicated if you try and account for everything. And that's what I'm trying to explain here. When I was saying wait for the chock, it's in that exact scenario here, okay? Cool, so I'm just trying to think if there's anything else I wanted to say. I don't think so. So let's kind of play price forward and see how we get on. Now, this is kind of the way I was viewing price action when we can get a little bit more advanced and potentially a little bit more complicated, right? I can see that price came into these sell to buy wicks. So remember, this is a refined pivot of the flip. The whole pivot is that range. So we'll obviously come into this range. So there's always a possibility that price isn't going to come into this refined pivot, and we could come in here and we could have that larger movement, right? This one. But whilst being aware, we could also have that, okay? And this is why it's a bit complicated. So I'm aware of two of these POIs. We obviously came down during Asia, built that liquidity, swept the liquidity, came into this level and had a nice bit of momentum that did lead to a bullish change of character here. All right, so now what do we have? We have a potential demand chain that caused that chock. So I'm just going to kind of take that candle and clean it up a little bit with these wicks. And that would be a level you could potentially look for longs from. Is this high probability? Not as high probability necessarily, because this is trading from a weak internal low when you are considering this internal structure, okay? And this is why it's a bit more complex, because this is an instance when it makes sense to me to potentially look to trade from a weak internal low, so against the internal trend and against the swing trend, because of the bigger picture, like I keep saying, right? And this is where, it does get a bit more advanced, but this is why if I was to say to you on paper, don't trade from weak lows, don't trade against the internal and the swing trend, and then you see me do it, and you would go, well, why are you doing that? And you'd be correct to ask so, but it's because of the overall narrative, right? This unique scenario where this could be that bigger movement to catch that higher low. We've come into that flip demand that caused that initial larger break, and this could be the start of that high low forming. We've rejected demand. We've had a bullish chock during Asia. So although that's a weak internal low, if you look at the smaller structure, it makes sense that potentially could be that move, right? I'm aware it's not, confidence could be better, but that's the move, or that's the idea behind why I would look for longs from within here. And I at least have, or another simpler way to think about it, if you really just want to focus on that smaller internal structure that I marked out, a simpler way to think about it is essentially I'm trying to play that internal pullback up to this level to then catch that sort of pro trend move, okay? So there's enough risk reward for me to do that. I can do that. Again, is this the highest probability in the world? Not so much, but it was more so how it's set up for Frankfurt, okay? So if we take a look, obviously as well, this is where price action, can get messy because we do chock then back down. But for me, more the reason why I pay attention to that chock is just to justify this as a level, right? We've come into here, we mitigated demand, it was strong enough to cause a chock, now I'm looking to try and catch that, okay? This is why you got to kind of learn when to sort of pay attention to chocks and when to kind of, disregard them a little bit more. But let's say you did want to see another bullish chock from this level for a bit more confirmation, that would then be the high you need to see to go, right? Because what did we have? We had the down movement, right? Then we came up, we pulled back, and then we took the high. So then this becomes your nearest low. Then we take that low, then we come down, right? Then we pull back, and that's the movement. So that's the high we need to see go, right? If you want that extra confirmation. For me, it's more so just I'm waiting for Frankfurt Open at 7 a.m. BST, which brings us to about here. So we have the chalk, which now, so I was aware that price could obviously come deeper. There's a wicks down here, but I just moved that out of the way. Okay, following order flow more so because price tends to go wherever it's kind of nearby at Frankfurt Open, and I'm kind of looking at this level here. And hopefully you guys now can understand my thought process of basically I'm trying to target this level here to then potentially catch that low down to here, with then the potential that could do that. Like I'm thinking of all these scenarios, but it's more about like, is there enough risk to reward to play this up to the next level, right? Bit more complex, bit more advanced. For the majority of this, what I said at the start, just be patient for this, and wait for the easy stuff, or even just wait for price to have that deeper pullback, right? Wait for it to have that nice clear structure. Wait for a day or two, then it will come down here. Then you'll have those nice, clear, obvious zones. If you have to kind of think way too hard about what's going on and come up with all these complex scenarios, just stay away. Give it a session, give it a day, give it a couple of days, give it a week if you have to. You do not have to trade all of this, right? It takes a long time to try, kind of get to this level, and it's unnecessary as well. You don't need to, okay? But I wanted to just explain why I was initially happy to get involved in the middle with this sort of reasonably indecisive price action, simply just because I could build the logic behind why that might be that movement there, or at least just a pull back up to this level. But more so, it was all aligning with the start of Frankfurt. Okay, we pulled back into this extreme demand. We had the bullish change of character. We mitigated the demand that caused that initial clear chalk, right? And then by the time Frankfurt came along, we'd had basically the end of that little pullback into that demand, gave us another bullish chalk. Okay, now I can build a case. I think it's pretty likely we're going to come up to here, or at least try and take out this high. Okay, and that's all I was trying to play, was a very, very quick move. So let's jump down to the M1. Excuse me. Okay. Cool. So this is where it was a little bit tricky, because I didn't massively or I wasn't super confident of where to set my M1 limit order here, right? Because we come into this level, so we have a nice flip. Okay, we sweep this liquidity into this level, come up into there, fail to put in a lower low, and then we push up, right? So obviously the extreme is already mitigated. That's nice. So I don't have to worry about that, right? Now we have this whole flip range here, from the high of the flip to the low of the flip, but you can see what happened after it was created, and we got that initial, and we got that initial change of character. What happened? Price initiated out, mitigated it, and continued. So whilst there's a possibility you have this unmitigated level here, very often when that range has already been mitigated, it's not always going to come back for it, okay? So in this instance, I wasn't 100% confident, and that's why it's tricky. I viewed it as being mitigated, and some of you might be happy with a bit more risk, and you could set an order on here, and you could set an order on here, right? If you really like the level, right? But I do that more so in the high probable areas. So what I was essentially looking at was this POI here as the last unmitigated level. Did it sweep? Did it not have any inducement? No. So actually, the more I think about this, the lower probability it's becoming. But I kind of just saw this with nice inducement building below it. Wrong one there. Just before Frankfurt Open, I'm happy to try and get involved. Okay, I think I actually set it a little bit low just to try and cover the distal of that, in case, I can't remember exactly where I set it, but it'll be in the markup. Yeah, and then it did that. So maybe I can't remember exactly where I had it, but it wasn't. So I was aware that the range is here, but I set it on the pivot just because I wanted to be trying as refined as possible when I'm not 100% confident in the setup. And then it shot up, which is fine. That's cool. Just followed order flow. It is what it is. Now at this point, once you spike the high and pretty much touch supply, I pretty much instantly cancelled my order at that point. Now as price starts shooting down, this is not where, in my opinion, you want to keep chasing price, right? Because remember, the whole idea behind this move really was to just try and, price is shot forward a little bit there, so I'm going to put it back. The whole idea of this move was literally just to try and catch a quick, almost a scalp, like a quick session open move up into here. Obviously with the potential it could go higher if that's going to be the pullback, but really, you want to have your risk removed. Once price has done that and then it's coming back down, I'm not really interested at that point, right? I'm trying to get in this initial bit, right? So once I did that, it was super indecisive. I'm out, I'm chilling, I'm waiting for something a bit more clearer. So as you can see, price comes down, obviously no inducement in this one, and then that's when it came down and used that move as inducement for this level here. But again, that's not, for me, is not really a great trade, especially after that movement. This movement is done now, and I have zero interest in that. So now I'm going to stay in the M15 because this is literally how I was approaching it. you can see again, like how indecisive this is now, because what happened in the space of this one candle, just draw out the chocks, I know some people got a bit confused with that as well, is we had the down movement, the up movement, down, up, down, we came up, then this is when I tried to get tagged in. Now in this one candle here, this big candle, it went up, okay, so it continued that bullish internal fractal structure at that point, and then it came down all in one candle, okay? So technically there's a bearish chock here, right? But no, when chocks like this and it's that complicated, it doesn't really matter. I'm not paying attention to it. This is just when, look how indecisive it is. It's taking highs, it's taking lows. Just gonna delete this. Like this is what I was talking about when it's in the middle. It's in the middle of this larger range. This is typically what happens, right? There's no clear commitment. Everyone's getting chopped around. Why are you looking at the M1 trying to trade this now? Like, step away. And I'm not having a go, I'm just trying to like be blunt here for the sake of your benefit. I've got caught up way too many times, right, trying to trade this. This is when you just kind of have to look at the M15 again and go, okay, well now what I'm more interested in is seeing, can we get a movement into here? Then I'm going to look for that movement at least into here, right, with the potential to continue going, but then look for the long from within here with the potential that we're catching that. But if I'm wrong and I get long from within here, at least I can target then that high there, right? That's the kind of thing I'm thinking about. That's the framework. Thinking about your M15 structure. Get away from the M1, especially when it's doing this, right? So let's play it forward a little bit, just doing its thing, right? Now, when it came into here, that's when I would have been looking for the M1, right? And I was, but it just tapped in and absolutely dumps. Let's take a quick look. Yeah, so just sweep all these highs, come into this level and dump. There's no entry in there for me. I mean, some of you, I know we're looking at the flip here, like there's logic behind that because we've done what we need to do. We clear out all that liquidity, we mitigate that level we want to get into, we come into demand, we push up, we sweep liquidity, so it's a nice flip that sweeps. We came down. Could you potentially have taken that? Yeah. Just have to be aware that obviously selling into you know, not the most well-priced levels. Ideally we kind of want to be getting up there, but I can understand why you took that, or we're looking to take that, sorry. But now we're coming to this level, okay? So again, think about your structure, think about what's going on. Well, now this becomes our strong M15 internal high. Okay, because we've had that break there. You can see the continuation sort of this supply chain, but we're coming into this level. So this is where you have to, again, think about those two scenarios. You can either focus, well, I'm focusing on both. I'm looking at the larger structure, and this is coming to this extreme level. So if this larger structure is going to play out, like what I'm hypothesizing, this is the level basically in which it needs to happen, right? So this is why I'm happy to sort of, let's say, aggressively look for counter M15 swing trend, because obviously the swing trend is bearish. So I'm trying to get long against the swing trend, and I'm looking to get long against the smaller internal trend, right? But remember what I was saying, the risk to reward is here high enough. Well, although I'm looking for that movement, if I'm wrong, maybe at least I can play the pullback into the strong internal high, and then I can have my risk removed. All right, once that level's been mitigated, no, I'm not going to want to be looking for longs from within here, because this is a weak internal low. You know, it's facilitated its job, which is do that pullback, and now price is ready to take it out. But at this moment, right, all the possibilities are there just for that movement or beyond, okay? Despite the momentum, you know, if I can get my M1 entry model from this pretty damn clean level, I'm happy to look to try and play that movement there up into at least 15 supply. So hopefully you can see how this framework is really helping us to make sense of when, on paper, it sounds really bad. You're trading from a weak swing low, you know, against internal structure, but these, you know, I'm painting, I don't know, I'm trying to explain logic about when it makes sense to do so and when it doesn't. And that's why, you know, you can understand and you can watch the course lessons and understand the theory and understand the logic and have a trade plan that is perfect, that makes sense. But then knowing how to apply that in the live market in every unique scenario, putting all the pieces of the puzzle together, that's the bit that takes a little bit of time. But it comes back to what I said at the very, very start of this breakdown. Focus on here and focus on here. Or don't even do that and keep it even more simple. Know where your swing high is and know where your swing low and swing high is, and then focus on the most recent sort of clear internal structure. And don't worry maybe too much about, like, you know, the other ones, and just use this as your main framework, your initial internal breaks of structure, and go, right, I only want to trade in line with the internal structure, right? And then today you would have only looked for that movement, and then you would have waited for this, and you would have only looked for a potential short from within here, right? If you're happy to do so. That's how you can keep it even more simple, right? You don't have to be looking for here, and I would definitely stay out of these, you know, 95% of you. It's just unnecessary. Okay, so now we can drop down to the M1, and what do we have? So obviously, as you guys know, the bare minimum I need to see is a bullish chock on my time frame. That would be all the way up here. Now, some of you may not, you know, especially when chock is very far away, you may not want to wait for that. Okay, so if you start to kind of see this and then we get like an eye chock, yeah, maybe you want to do that, maybe you don't, but it is riskier. So I would say until you're consistent, do not do that and stick to being very mechanical with that in this instance, because as you'll see here, look what happens. We start to move around. To be fair, I don't think it gives an eye chock, does it? Yeah, it does. Okay, so this is where, like, if you use the eye chock, you go, right, okay, well, the true chock is all the way up here, so I'm going to look for this one. But the problem why this can be an instance is, what have we done? We've just built equal lows, right? We're coming up, we're pulling back, and then usually, not always, but usually those get swept, and that's what ends up happening in this case. And that's where eye chock can really catch you out when it's counter trend of the time frame you're looking at, which is why I try and advise the majority of you, when you use eye chock, use it on the pro trend. So if I go back to M15, I'll show you what I mean. Where we had it during New York yesterday, where this is like the pro internal trend. So we have a movement up, right? And then we have the pullback. So you want to know, when is this pullback likely going to end? Obviously, we want to try and catch it down here, but it's not always going to do that. So, and because there was nothing in this leg here for price to break, i.e. if there was a little pullback, then price takes out that low, right? So you have a bearish chock, and then it pulls back, and then it breaks this high. Now you have a bullish chock, and now you have an M15 level. That's really helpful. But sometimes you just get one straight push like this. So how can you use the change of character theory to our advantage? Well, price comes back, right? It pulls up, and it pulls down, and then it breaks that high. So that's your internal change of character. It's not the true chock, right? Because obviously at that point, it's between that high and that low. But that's why I say only use that really when it's pro trend, right? Because you're trying to trade, you're trying to just time the end of that pullback with an internal change of character, right? And then you can do it. But when you do it counter trend, which is what we're just looking on the M1, that's when you can get caught out a lot more. Not always, but a lot more. And that's why I'd advise you kind of stick to the true method. And that would have saved you from a potential early loss if you had got along there. Because now, what are we doing? Sweeping those lows. Here's your M1 change of character line. Okay, we still haven't broken the M15 demand, just about holds, and we have this level of M1 supply. Okay, just gonna raise this in a little bit. So let's see what happens. So we come into supply, we react, and then we push up. So at this point, what do we have? We have the full M1 entry model, because we have liquidation, mitigation, V-shaped reaction, change of character, and we also have a flip. So this is where it's a bit tricky, because we have two POIs. Excuse me, we have from the high to the low of the reaction, or of course you could refine it a little bit more to the inside bar, and then we also have the extreme, right? Again, the extreme is pretty messy here because we've got a large wick. The way I personally included it was kind of just try to clean it up like that, and had it like that. Now, because the flip didn't sweep liquidity and it was kind of just quite a small pullback, I set my order on the extreme down here with the 3 pip stop, because I didn't want to enter below the EQ, just to kind of increase my probabilities of getting tagged in, and that's where I had it. But as we can see, momentum is very, very strong. It just pulled back, mitigated that, and flew. So it is what it is. Hey ho, that's just part of the game. And then it started to move to the upside. So now we're coming towards the end of the session, but remember, we look at the M15. What do we have? This is the strong internal high. So if that internal structure is going to continue, what should it do? It should not breach this level. So potentially you can look for shorts from within here to the downside. Now, this comes back to what I keep trying to say. Just because you have a framework where we say this should happen, doesn't mean it has to, but more importantly, does not mean you have to trade it, because you still have to be aware of where is it happening, and potentially this short from here, right, when we initially had that bearish structure from the lower high, could arguably be higher probability than trying to trade from this one, even though the framework's the same. Why? Well, because of the bigger picture, because we've had that movement, we've had the pullback into this extreme demand, and we could get that larger internal structure to have that much deeper pullback. So it's like, now do you want to trade against that? It's up to you. End of session, maybe, maybe not. But just wanted you guys to understand the logic behind that, okay? So we drop down to the M1. Obviously, there's some POIs within here. You can look for price to reject. If you're going to take a risk entry, you always want to really be doing that on the extreme. Probably ideally recommend you cover that wick as well. We've already blasted up through this one. So this is where you wait for your M1 confirmation entry. The change of character is all the way down here. So just being patient, let the liquidity build. Don't get FOMO, don't get FOMO. See, haven't broken it. This is where people try and chase it down. They think they missed the move. They get, well, FOMO, and then they get burnt. Does it mitigate that demand? Yeah, I think it does. So this is why just waiting for that shot, keep it mechanical. Yes, sometimes you'll miss moves, but it will keep you out of so many unnecessary losses, and it just keeps you calm, right? because it hasn't met your entry criteria until that happens. So now we have these big highs liquidated, again getting very, very volatile, so not the type of price action I really like to look to get involved. Obviously now the change of character line is going to be here. Resize this, almost there, to the low. Cool, drag that across. Now you've got your choc level here. So at minimum, we need to see this logo and ideally see demand when the one clearly fell. But again, you have to be aware where we're coming right to the end of the session, and then we break that low and we smash straight through. So where are you going to enter here? For me, none of it really is that clear. The only unmitigated POI you have is this level. But like when you see price move like this, again, this is when it kind of comes down to your experience with like the nature of price action. For me, that's not the type of price. Like I want to see like something clear. Like this is kind of just trickling. It's still quite volatile and it just sort of dumps. This doesn't specifically react to like a pivot POI. It doesn't sweep. It doesn't have any inducement. It's quite low in the leg. Like if you're going to be able to ride out that pullback, it's the end of the session. More importantly, I just didn't really like it. So yeah, once I missed this movement here, I wasn't really interested. I don't even know how this played out. How did it play out? It comes up higher. Like there's nothing here. Like it's all just I have no idea. So let's just play this forward to where we are now. And that would be the end of the session for me anyway. So yeah, and this is what I mean. It's indecisive, it's volatile. It's just leave it alone. Like until something's a lot clearer at this point. But hopefully you guys took some value from that. A bit more of a complicated session in terms of you can make it very complicated or you can try and keep it a bit more simple. Realize we've come into a nice level. We've had a decent amount of momentum yesterday. You're aware of trying to catch that larger higher low to the upside. For you guys on the beginning trade plan, this would be an instance in which I think you can look for the M1 entry model straight away. The chalk is more about like that initial break of structure. You just want to see some form of M15 structure at least shifting in your favor before considering longs, okay? Obviously, like once we've had this sort of movement, a lot more sort of bullish development, and you're coming to an extreme level, like yeah, that's when you could potentially look for it. Or maybe you want to focus on internal structure as well, and maybe you're happy to only like look at the most recent, internal structure, and you only want to trade on side of that, and that's why you wouldn't take this. Figure out how, and interpret it kind of how you want, but that's what I would say. Once we've kind of had that movement, you find a good M15 POI, you don't necessarily have to wait for an M15 shock. Or what you could do in this case, which would be even better, if you really want to play the M15 pullback, which is kind of what I'm hoping we'll do, if we get that, is we get the internal structure shift bullish. Ideally, we get that break as well, and then we can start catching these higher lows, and that's going to be the nice, clear, simple trade. So that's what I'm saying. If all of this is too complicated, it doesn't make sense, you do not have to risk your capital or brain power trying to handle it all. Just stick to the clearer stuff when we have nice clear ranges, right? And then we initially break. Cool. I'll leave it there before I make this video any longer. If you're trading in New York, have a good one, and I'll see you next one. Cheers, guys.